Right, what is up, guys? Back at it with another altcoin watchlist video. And this week we're going to switch it up a little bit. I'm not going to do a whole review on last week's picks. I'm actually instead going to give you a quick rundown on my mental thought process for the BTC price action. So let's just go ahead and jump into that. And after we're done with BTC, I'll give you my list heading into next week as to what I'll be most interested in trading moving forward. So BTC, pretty extreme rally, and obviously when the trend is extreme, you have to adjust with it. So if you're trading high time frames and you're trying to scale assumptions onto those high time frames, like, hey, is this a bearish retest or are we reclaiming this high time frame, resistance level? When you're trying to make an analysis like that and all you have to work with is vertical price action, there's no structure here, there's no daily market structure that you can analyze, right? Like you could have back here, that's a low, it's a high, it's a high, that's a low, right? That's a high, that's a low. There's none of that. It's just vertical. So when that's the case, you have to zoom in. And when you do that process and you zoom in, okay, 4 hour. All right, now you see a little bit of structure, but even then, it's really only like one high and one low, right? So then you have to continue zooming in. All right, what am I going to use? What do I have to work with here? Is it the hourly? And so when we're trading here, right, when we're trading in any of this price action that I just circled, the hourly 200s are not relevant to you, right? There's no, I mean, there's structure, but it's not really anything that you can actionably trade. There's no visual, right, portrayal there. So you have to keep going. And this trend was so extreme that the only way that I'm able to make an actionable analysis, right? Because there's an analysis, there's an actionable analysis. Those are two totally different things. Obviously, we are bullish during all of this price action. How so? Right? Give me why. What's your reasoning? Okay, well, obviously, when you zoom out, we're breaking out of key resistance levels, blah, 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 yada, yada. The hourly market structure is bullish, and we're trending along 15-minute, 200 moving averages, right? And that is the trend portrayal. This is more of like a deviation. The reclaim makes you think, all right, let's continue upside, and the trend continues trending, right? So once that pattern breaks, once that trend breaks, and by the way, there is this recurring theme, this recurring pattern of these local tops that form after three equal drives, a sweep of those highs, and immediate closure back below, right? So this is a similar structure to what we acknowledged back here, and it wasn't the 15-minute 200s at the time. It was actually the 30-minute 200s. It looks more like this, right? And we said, all right, these three equal highs with a clear sweep and an immediate closure back below, probably something bearish, right? And somewhere over here, you lose that trend. This is where weakness forms. This is where you're allowed to start assuming something other than the primary trend that you would have assumed previously, right? Hey, maybe we're going to get a deeper pullback. Maybe we break the daily market structure. Maybe we lose all these support levels, blah, blah, blah. Maybe we go to zero, right? Whatever you're going to argue, but that's where that starts to become a little bit more relevant to you. So, not only just sweeping those highs, closing back below, that is the light bulb in my head that goes off that says, this might be bearish, right? And then losing the actual trend is then the nail in the coffin that says, yep, this is bearish, right? Those speculative thoughts, those are now coming into fruition. We can attribute more merit to those things, and we very very well may see them play out to a much bigger degree. The snowball of weakness has now formed. So from there, your plan A, right, is to just assume uptrend, because it doesn't matter if you look at the daily, the weekly, the 4 hour, hourly, the 15-minute, you absolutely know just as well as I do, just as well as a 4-year-old does, that this is an uptrending chart. Right. So upon losing that trend, you're then allowed to assume why we might continue downtrending into more significant support levels lower. Right. So whether that be the hourly 200s, which in hindsight held up beautifully as the local bottom, I did not expect them to, because they're not very relevant. Right. I was noting them when I journal my daily thought process in the market. I'm noting these hourly 200s as they may be relevant, but truthfully, the area that I'm interested in is these 4 hour 200s, which I'm speculating may be confluent with this 25K demand zone when and if we get there. So by the time that that happens, I would love to see this region be one collective support level rather than having to acknowledge this daily demand zone and then negative 3% lower, acknowledge the 4 hour 200s. It's a little bit more clunky of an analysis. So if the market could shape up beautifully, butterflies, rainbows, and dandelions for me, that'd be great. That is the interest area of interest that I'm, primarily targeting. with the hourly 200s as a bit of like a checkpoint prior to us getting there. Now, when you test your hourly 200s and bounce, that is very much, comforting if you're still bullish. It is indication of shorts taking profit, scalp longs jumping in and trying to catch a quick bounce, right? It's indication of all of that. It's not necessarily strength just yet, though, because at the time we are still in a trending market environment, right? So the higher time frame trend is still bullish, but this trend is still bearish, and that is the case for since here, even until here, even until here, right? The only thing that invalidates that analysis is the reclaim of these 15-minute 200s. In which case, when that happens, you can then come back and say, wait, never mind. I'm not allowed to target this region anymore. In hindsight, this was the bottom. Here's where we run it back turbo. This is the strength that comes in again, right? And the trend that was primarily the trend beforehand will likely just continue trending. That is your primary assumption. Why is that my primary assumption? Why is that analysis, relevant to you? If obviously that's not what's happening, it is because on a long enough outlook, that is absolutely a winning mindset. It 100% is a winning mindset, and it's the same thing here where you're assuming trend extremes, right? You're zoomed into these very, very low time frames, something like the 15-minute to portray this kind of an uptrend, right? You lose that trend. You would then think, okay, well, we tested range highs, we lost the trend. So now we might pull back into mid range. We may even pull back into range lows. This price action, the reclaim of that trend, makes you think, oh, you know what? In hindsight, this is actually the bottom. I'm not going to get my entry here. I'm not going to get my mid range. I'm not going to get my range lows. I can't really look for a pullback in a higher time frame because here is every time frame once again from our weekly to our 15-minute is bullish, right? We'll probably just continue the exact same trend prior, and that's it. And when you draw that thought process out as a setup, the setup looks like this. Even if you're just targeting a 10% move, right? Something like this, that's a 5.6R trade. So beautiful thought process. And when you apply this over a long term, half the time you're going to be disappointed. And half the time your analysis is going to play out. But if half the time you are disappointed in taking 1R losses and the other half of the time you are capitalizing on 5 to 6R trades, that is a winning mindset over a long term, right? So it's the same exact thought process here. And actually, this time, right, you never had to go back to plan A because the market didn't ever warrant it. The market just kind of said, well, here's your downtrend, and we're just going to continue downtrending. And you would have assumed we test a higher time frame support level, right? And we test the exact same region where we found a higher low last time. You would think, if we're going to find a higher low on the daily, we find it here, if anywhere. And then the reclaim of the strength may lead to, hey, that was the higher low on the daily. Let's run it back turbo again. Obviously, higher low locked in, and then weakness once again, losing low time frame trends all over again, forming that snowball. And now in hindsight, this is a lower high in the daily, and that's your lower low. And downtrend, and that was the hey, I'm not going to buy this dip video last time that I did a Bitcoin analysis, right? And then obviously, ever since then, well, not obviously, but ever since then, we had that stablecoin depeg issue, and somewhere down here, that's where your boy decided actually Bitcoin was created specifically for this reason. It was a total fluke. It was a fundamental trade. It wasn't even really a trade. It was just, I don't know what to do with my stable coins and I'm very scared. And the market has pushed me into a corner and forced me to buy Bitcoin. And in hindsight, it forced me to buy Bitcoin at the bottom. So I'm very lucky. But moving forward, right? Assuming uptrend, assuming downtrend, assuming uptrend, and then, oh, well, it wasn't right. So now you're forced to assume downtrend again, right? It's like, well, at this point, you're now watching as a mindset that has played out for 2 weeks and 40%, right? A winner's mindset is no longer being valuable, right? That same like thought process, that trend style mentality is no longer applicable because had it been applicable or had you continued to apply it, you would be right, obviously wrong because we didn't downtrend. You're wrong again. You're wrong again because we're in an uptrend, right? And then here, oh look, we're bullish again, right? And then oh, we're bearish again, right? And we're bullish again, right? We're bearish again, right? So it doesn't matter. This is exactly why people sell you algorithms, by the way, instead of using it for themselves. You have to use your own discretion as to when is my system applicable, when is the alpha actually alpha, and when has it decayed and I need to take a different approach. So in this context, the alpha of using a trend style analysis along 15-minute 200s that was previously alpha, right? 40% move in 2 weeks. And then immediately upon loss, the drop of like what, -5% or something. Yeah. So -5%. And then, oh, look, we're reclaiming. And then whatever, a 2 or 3% bounce. Who cares? Right. That alpha is no longer working. You get chopped, you get chopped, you get chopped, you get chopped again. So you have to deviate away from it. You have to use your own discretion and take 2 steps back then and totally reassess your approach. And the approach for me, right, whenever this happens, is if my trend style analysis stops working, we may just be forming a range. So now, any analysis that I give you moving forward, in order for us to be able to scale assumptions to a higher degree and say, hey, we can start looking for a pullback into the 4-hour 200s, or hey, we're breaking out of this weekly supply zone. Let's look for 36K or whatever seems unfathomable to you at this time, right? Whatever the next daily resistance level is, right? In order for us to be able to scale those assumptions to a higher degree, I would have to see something that I have not seen anytime in the past week, because clearly the 15-minute 200s are not cutting it, right? So in that sense, it is if we manage to trend above this range high, we're probably going to see a bigger breakout. Maybe we see 30K, maybe we go to 36, maybe we go to 40. Who knows, right? At the same time, if we lose the range lows, along with something like, and this is where your confluence comes in, hourly 200s, which in hindsight held as the local bottom, not that I expected them to, but they did, right? If we lose both of those, then we may very well begin trending in the opposite direction. And at minimum, I'm allowed to assume that we can come down and test these 4-hour 200s. And at that point, during this price action, right, with this white space, just the same way as when we lose the 15-minute 200s and I'm targeting, okay, hourly and 4-hour, my biggest worry is not, am I going to get my bids? Am I going to get my bids? That's not my biggest worry. My biggest worry is, am I going to get my bids and then some? Right? Is the market going to come test my high time frame demand zones and test the high time frame trend portrayal, right? And bullish retest key daily demand and all that stuff, only to continue lower, meaning the snowball of weakness continues to compound to such a degree, right? That if you weren't prepared for it, you're screwed. So that's your biggest fear when that starts to come into play. And the only thing that eradicates that fear is a new showing of strength, right? So that would be losing the hourly 200s, breaking below the range, but then actually going on to reclaim them, in which case this price action would then be labeled a deviation. This is where you go long again, assuming that this was your bottom. You're probably not going to get these 4-hour 200 MA bids, and you go and repeat the whole process from there back into the range style mindset. So that's my, I don't know, 10-minute analysis on BTC. Probably longer than some of you asked for. I'm very sorry, but I'll try and keep the rest of this video pretty short. So moving forward, we have a couple coins that are of interest to me. First, we have Litecoin. It breaks my heart to say that Litecoin looks very, very strong, but it actually does. 4-hour 200 MAs are a decent portrayal of trend, along with what I'm going to call a daily demand zone. So if we do retest this region, I would expect it to hold. And then I would look for another push up into at least this 4-hour supply, at least this range high, and then which is also like a more of like a daily demand zone or daily resistance level, daily supply, whatever you want to call it, right? And if we break out above there, then I would just simply target whatever the next major resistance level is, and that would be maybe somewhere around like 116, right? So just taking it level to level and potentially a really nice setup on very high time frames here for Litecoin and some low time frame outperformance, relative strength within recent days. So love to see it. It's exactly what we look for. The other coin that I'm interested in would be Mask. So Mask, I'm interested in both on high time frames, but more so actually, I'm interested in the low time frame trend, incredibly clean. You guys are going to love this low time frame trend portrayal. And with my luck, that's when it starts chopping up, is when I finally get to show it to you guys. So high time frame, testing a daily demand zone as support, bounced off of it. And if you're not willing to be the person who jumps in front of the train of this downtrend, right? Because it looks like a absolute nightmare. It's a stair step. Someone's twop selling this or VOP selling this, and it's just making lower lows and lower highs, and it's just relentless kind of no bids. Every bounce gets faded. If you're not willing to step in front of the train and take on that risk of buying the daily demand zone and hoping and praying that you don't get your bids and then some, right? Which is totally fair. You can just opt to instead trade the 15-minute 200 MA trend. And in my opinion, this is one of the cleanest trends that I've seen anytime in the past few weeks. It's incredibly clean. It's like trend trading 101. So a reclaim of these 15-minute 200s did trigger a long setup for both my friends and family. And, we talked about that. And the setup looks something along the lines of like this, where you enter upon the reclaim, you assume that this is the low, and you target both the local resistance and whatever the next highest resistance is thereafter, and that's about a 6 or 7 hour trade. So far, you would have locked in that first TP, that major TP around that high, and then ever since then, it's giving you another retest to your 15-minute 200s. So I can only hope and pray that that trend is maintained for the remainder of the week. And if it is not, then that also means that you could trigger some short setups, right, back into this daily demand zone. And who knows, maybe even lower, right? Because this would technically be a lower high, which means that at this point, you are susceptible to making a lower low. And if you do make a lower low and you take things level to level, right, that's a negative 23% gap before the next daily support level. So pretty extreme stuff, which also means opportunity in both directions for anyone who's willing to play it. The other coin that I'm interested in, not that I'm interested in actually trading it, but I do have to acknowledge the relative strength compared to the rest of the market, is Monero. And Monero specifically, on high time frames, we are paying attention to both this daily demand zone as well as 4 hour 200 moving averages. Both get respected pretty decently, and are therefore able to use as part of an analysis to be able to actionably trade. Maybe establishing a swing long position along this high time frame support level, previous range high being retested back as support, along with the reclaim of the 4 hour 200 moving averages, and just simply targeting whatever the next daily resistance is higher. And if we deviate too far, right, we start to lose that region, then at minimum, you would anticipate back into these range lows, and maybe at worst, a loss of those range lows, loss of this daily support level, and therefore back into 135 ish, right? We go from there. So that's Monero. Probably won't be trading that one, but it is still interesting nonetheless. Then we have Seller. So Seller is an extreme trend. I do like 4 hour 200s for this. However, the issue is they're not actionable. So again, it's an analysis, but it's not an actionable analysis. It was. You could have established positions around these. It's very clear, breakout, reclaim, retest, whatever. But obviously at this point we are trading 40% above the 4 hour 200s. That's just an analysis at that point. There's no actionability, right? There's no ability to take action anywhere in that statement. So you have to zoom in. You have to give yourself a little bit something more to work with. And I really like the hourly 200 moving averages. And I think that this does the most efficient job of portraying the higher time frame trend. And then you can kind of go based off of that. So if we're above the hourly 200s, you might be interested in establishing some swing long positions. And if we're below them, then you maybe just want to stop giving or stop attributing bullish arguments to seller, and at minimum target 4 hour 200s, right? And maybe even well below them as well. But hourly 200s, I think, would be the thing to establish swing longs along, and any confluence that you can have along with that. So maybe if we tested these hourly 200s along with this region at the moment, you have some confluence in support and that trend, and then you can kind of go based off of that. You have market structure as well, which is all three parts of my system personally. So that's really all I need to be able to justify a long setup for seller. In the meantime, you want to be paying attention to whatever the most actionable trend is. And truthfully, Let's see. Is it 15-minute? I would say no. Is it 5-minute? I would say no. Right. So it's like it's kind of a weird mixture where I don't do this often and it's very obscure and I don't like it. But I would actually say that the 10-minute 200 moving averages, it sounds very odd to say, but 10-minute 200 moving averages do portray the trend the most effectively. So if you're going to be trading seller on a low time frame, which at this point, when I have to zoom in lower than the 15-minute, you've lost me. So I'm not willing to trade it. I will gladly sit on my hands and wait for higher time frame support tests or trends or pullbacks or whatever, and miss out on rallies in between all that. I'm totally fine with that. If you're not and you thrive on these lower time frames, I'd probably be using 10-minute 200s as a portrayal for trend, which does mean that maybe this is still a nice little bullish retest where we see trend continuation. But it also means if this region is lost, I can bet right that I will get my hourly 200 MA entry. Right? At that point, during this white space, again, your biggest fear is not, oh my gosh, am I going to get my entry? Look at this bounce, look at this wick, right? That's not your biggest fear. Your biggest fear is, am I going to get my entry only for it to, not even hold and we just blow right through it and go immediately to my stop loss? That's your biggest worry. As long as we remain still below the 10-minute 200 moving averages, right? Same thing, scale assumptions. You would love to see it test your entry and then reclaim. And that would be the quote unquote confirmation. I hate that word, but that would be the confirmation that, yeah, this is strength again. We're probably going to continue trending just as we did back here and just as we did back here. Right. Both times where we tested the hourly 200s and then continued to make yet another higher high on all time frames. So that's how I'd be looking to trade seller. And then the last one that I have for you is stacks. Stacks is currently breaking down below this local range. Try and wrap this up pretty quick. And then I'm looking for a test of this demand zone along with the 4-hour 200s because that is the most efficient trend portrayal in these high time frames. And I would speculate that if this is going to find support anywhere at all, right, and not make a lower low than here or even here, really, because per my perception, if you lose this region and the 4-hour 200s, I don't really care if you have your stop loss below this wick or below this structure, or below that structure, or below this structure, or below this low. You're probably going to get stopped at eventually. That's the way that I'm viewing this. So this is the point to take a bet on stacks, if any, in my personal, analysis. That's the way that my system works. And then if we lose that region, I automatically assume that it doesn't matter where your stop loss is. We're probably coming for it at that point. So that's going to be, how I look to play things. And then obviously, the same way that you're assuming weakness right now, you could use it to assume strength once again upon reclaim. And you could say, okay, well, I assumed that we would get our 4-hour 200 MAs, but we didn't. And instead, we are reclaiming the hourly 200s. We are deviating back inside of this range. And that then implies that we will go back into mid range and back into range highs. And who knows, maybe because of this trend, right? And a reclaim of strength, we maybe even break out of the range and continue the higher time frame uptrend. Right? So the high, low, and then higher high. So that's how I look to play stacks. And with that out of the way, that is the bulk of the video. Before you click out, I do want to say I am giving away an iPhone 14 Pro this week in March to someone on my Bybit referral link. So if you're interested in being eligible for that giveaway, all you have to do is sign up, register an account for Bybit using my referral link. The link will be in the description below. You have to deposit $100 and then you have to take one trade. So there are many of you, and when I say many, I mean there's like a handful, like 3 or 4 of you, who signed up, deposited, but haven't taken a single trade. So I can clearly see that you're trying to milk the giveaway, which is totally fine. It still helps me. I still appreciate you nonetheless. But just know that you did a lot of work for nothing. So at least go take one trade. That makes you eligible for the giveaway. And then once you did all three of those things, then it's just a matter of luck. And then I pick a winner at the end of the month or the start of April. And then maybe it's you. Right? So if you want to support me, that also does really help. It actually helps way more if you're actually going to be trading on Bybit under my referral link. But if you just want to milk the giveaway too and see if you can, catch a quick dub, $800 phone, or I don't even know how much an iPhone 14 costs, that's totally fine too. Regardless, I thank you guys so much for your support, and I really do appreciate you. Yeah, hope this provides value to you. Much love, and take it easy.